بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على سيدنا ومولانا محمد وعلى وصحبه وأزواجه وذريته أجمعين. اللهم ربنا أرنا الحق حقا وارزقنا اتباعه وأرنا الباطل باطلا وارزقنا اجتنابه. اللهم أرنا حقائق الأشياء كما هي ربنا زدنا علما وعملا وإخلاصا يا رب العالمين. اللهم صل على سيدنا مولانا محمد وعلى وصحبه وأزواجه وذريته أجمعين. اللهم انتقم من الذين يقتلون الأبرياء والأطفال والنساء والمسلين والعباد والشيوخ والمشايخ في غزة. اللهم شتت شملهم، اللهم دكهم، اللهم خرب بيوتهم، اللهم دمر ديارهم، اللهم زلزل أقدامهم، اللهم زلزل بنيانهم وانزل بهم بأسك الذي لا ترده عن القوم المجرمين. اللهم لا ترفع لهم راية ولا تحقق لهم غاية واجعلهم للعالمين عبرة وآية يا رب العالمين. وصلى وسلم على سيدنا محمد وآله وأصحابه وأزواجه وذريته أجمعين برحمتك يا رحمن الرحيم. Okay, so the global, the first section, the global capital expects China to do her duty. 2007-9 credit crunch. Credit crunch just means credit squeeze that emerged in America and much of Europe is usually attributed to a decline in non-financial investments, in production, etc., a build-up of corporate savings, lack of investment, and insufficient long-term recovery of profits from the troughs of the 1970s. But the West Europe and America have now been joined by what are called the newly industrializing countries as important engines of capital growth. So capitalism is all, it has its core, but it's always, and it has its periphery, but it is always expanding, and it is inclusive in the sense that new actors and things like that. So we have talked about these things in other sessions. The scope of the circuit of capital, So circuit of capital. In order to understand circuit of capital, well, first we need to look at what capital is. The capital is anything in search of itself. So capital is anything whose sole purpose is to accumulate itself, to multiply itself. So it's basically quantification for the sake of quantification. And circuit of capital is that you need capital, a thing. It can be money, for example. But not all money is capital. Money can be for consumption, so money can, so that's not a capital money. Money can be for normal investments. So you can have some profit, and so you can live your life according to your needs, etc. But money is capital when its sole purpose. Obviously, it's an abstraction in that sense. Money is when its sole purpose is to make more money. Then money become capital. So same piece of paper can be, it can have different dimension, and it is capital to the extent that one logic is dominant over other logics, for example. And when we say a capitalist system, it's obviously always relative, because capitalism itself is an abstraction. No society can be capitalist purely. um, it's just crazy. So it's, when we say it's a capitalist economy, it's only relative terms. So mature capitalism, less mature, etc. So with money, you buy some, you know money capital needed to pay for a factor of, let's say, um, this accumulation is through, or this circuit of capitalism is a circuit of production. So you need to pay for factors of production, raw material, etc. Um, need to pay for labor. Yeah. Um, then you can produce commodities. So that's the production. So circuit starts here. First, you need to have capital. Then you need to get factors of production, build a factory or something, and then produce things, produce commodities, and then you need to transport them to market, sell them, and after selling, you had made more money. So this, you have accumulated. So this whole circuit, it gone back. So this is a circuit of capital. One example of circuit. And this circuit of capital obviously can be broken for various reasons, can be switched for various reasons, etc. Okay. So the scope of the circuit of capital expanded enormously in the 1970s, and the volume of profit generated by capitalist investment has increased massively, even if the rates of profit in the old capitalist core economy remain below the peaks achieved in the 1960s because of the downturn, and also naturally because when capitalist economy mature, then there is rate of profits naturally go down, because there is a limit. So once you start capitalist economy, you have a lot of space to cover. But as capitalism developed, that space is occupied. So you need more space, in a sense. If you if we use spatial metaphor, for example. So it's for both contingent and necessary reason this has happened. So even though profits have increased, rate of profits have gone down. This means that the new capitalist core regimes are beginning to emerge within global capitalist order, elsewhere, outside mature capitalist economy. So the new tigers, or etc., new economies, and then they slowly become, uh, you know, eventually will become mature capitalist economy, and you will need new spaces, etc. So then, preferably, the countries in periphery can be included slowly in that center or near to the centers, etc. Accordingly, this means that new capitalist core regimes are beginning to emerge within global capitalist orders. It is due to these new cores over the period of since annual global real global GDP growth has usually approximated 4%, and only 5 years out of the 36 has global real GDP growth been below the average rate of growth of world population. So although in the old core countries, capitalist core economies, the profit rates have gone down because of the concentration, because of the saturation, another reason. The emerging new economies have compensated for that. and that's why overall growth hasn't been that bad. IMF data shows that there were 5 recessions during 1970-2007 period, but all of them very brief and shallow. Again, this may be attributed to the astonishing resilience of the newly industrializing emergent economies, especially China, whose growth rate did not slacken perceptibly even during the East Asia crisis of 1997-1998, and even other East Asian economies recovered quickly. All core countries-based multinationals have benefited from the resilience of the new. That's important. Have benefited from the resilience of the new core countries, and their rates of profit in countries such as China are often reported to be higher than that in the old core countries. The same multinationals. So it is in the Chinese growth is in the interest of multinationals, which are based in core capitalist economy. That's why this whole rage against China is not as genuine as it seems. It's more political. The footnote here says that the evidence on this is mainly conjectural. For estimates of corporate profitability in America, for example, exclude profits of these companies from overseas operations. Okay. In China, for example, from 1998 to 2006, profits of industrial enterprises soared from 2% of GDP to over 10%. The World Bank attributes strong profit growth in China to improvements in efficiency and labor productivity. It is sometimes asserted that Chinese economy is not large enough to serve as a locomotive for pulling the global capitalist economy out of the sort of recession experienced in 2007-9. In 2008, China's share of world GDP measured at current US dollar and exchange rate was only about 6%. But this is a serious underestimate due to purchasing power parity term. Share of the Chinese. I think this should stop here. The share purchasing power parity. Basically, measures real economic value or worth of an economy or the power of an economy. And the basic method is to, and it obviously measures different countries' currency and their power to buy similar things or the same things. And the way they do it is done through what is called basket of goods approach. So what you try to do is the PP exchange rate is the rate to which this basket of goods at which this basket of goods, one country's currency, let's say, so how many Australian dollars is needed to buy this basket of goods? Um, and how many Indian rupees would be needed to buy the same basket of goods? And obviously, you assume certain things. For example, you assume that there are no transaction costs, no trade barriers for particular goods, etc. So that much. So, for example, if that basket of goods $15 Australian and let's say 1500 Indian rupees, then 15 in PPP terms, 15 um, a dollar Australian are equal to 1500 Indian rupees, irrespective of what actual uh, rate of exchanges in the money market for the exchange market. Let's read it again. So, but this is a serious underestimate due to the holding down of the dollar yuan exchange rate by the Chinese government. In purchasing parity terms, the share of the Chinese economy in the world GDP was about 11% in 2007. China has been growing at an annual average growth rate of about 10% during 1978-2008, and the investment to GDP ratio exceeds 40%. 40% in most years. Wow. From the footnote, figures in this paragraph are from World Development Indicators, an annual publication of the World Bank various years. Okay. China, over a fifth of global's fixed capital formation, basically investment, now takes place in China. Estimates of profits remitted by foreign companies from China to metropolitan home countries vary widely but are substantial and offset to some extent the reduction of profits in these countries due to enhanced Chinese competitiveness. Um, Chinese competitiveness. Okay, profits. Some examples of the profits earned in 2006 in China by US-based multinationals exceeded the total profit they earned during the 1990s decade. These figures are from US Today, 25th of 2000. China remains, however, basically a domestic-oriented economy, and I think that is its strength. The World Bank estimates that during 2006-07, over three-quarters of China's GDP growth was accounted for by expansion in domestic demand. That means that structure of Chinese economy is strong, because if it is export-oriented, and it is vulnerable to the extent that things beyond its control can affect its economy. The import to consumption ratio, so that's the import to consumption ratio, is rising rapidly in China. However, and that obviously if import to consumption ratio is rising, it means getting more depending on external factors. But however, and booming Chinese imports contribute significantly to global corporate profitability. The import to consumption ratio is rising rapidly in China, and booming Chinese imports contribute significantly to global global corporate profitability. So they are profiting here from investment in China, and here from Chinese exports to China. But despite that, Chinese economy is still, so that's fine. You can have large exports, but it's what is important is that the the ratio of domestic demand within the overall economy. That's what makes an economy domestic oriented or outward oriented. In any case, Chinese exports are more of a threat to the developing countries than they are to the West. Chinese exports. In 2007, China's export to India, Brazil, Russia, and China's export to America. China's export to India, Russia exceeded China's export to America. They're a threat in the sense that those economies become dependent on China. So I read the other day that China has now become India's largest trading partner or something like that, replacing America. Obviously, these figures are from 18 years ago, so probably the trend has continued. Okay, let's stop here because the next two paragraphs are overall comments on this. So we'll consider these two paragraphs in the next session. Inshallah, subhanakallah wa bihamdik, nashhadu an la ilaha illa anta, nastaghfiruka wa natubu ilayk. Sallallahu ala sayyidina Muhammad wa alihi wa sahbihi wa sallam. اللهم انصر أولياءك في غزة واستغفر لهم في إيران في مشارق الأرض ومغاربها وانصر على عدوك وعدوهم إنك على كل شيء قدير. اللهم ألف بين قلوبهم وأصلح ذات بينهم. اللهم ألف بين قلوبهم وأصلح ذات بينهم. سدد رميهم وسدد خطاهم وسدد رايهم إنك على كل شيء قدير. صلى الله على سيدنا محمد وعلى آله وصحبه أجمعين برحمتك.